Hello traders and investors, I'm L.A. Little. This is your daily NeoTA wrap. We take a look at these markets from a neoclassical perspective. It means we're looking at supply and demand on the charts. We're using the information at significant points, at significant tests, to tell us what the market wants to do. Using that information, we can make decisions with increased probabilities of success. And then we put that with reward risk to make trades. I do the show 4 times a week, every Monday through Thursday. It's broadcast at 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. And if you haven't subscribed and you want to, anytime I push public content, any kind of videos, whether it be this, whether it be any of the videos that you see down here in the visitors section, or if you're a member, of course, in the members section, you'll get a notification of that happening. As far as what happened today, let's take a look at the numbers. And what we saw today was a little bit different than what we expected. And that is that we were expecting this market to try to pull back, but instead it did go flat on the NDX, had a little bit of a gain here on the S&P 500, same thing on the Dow, the Nasdaq, and the Russell, a shine to the upside, almost 1% higher. Oil was a good contributor today. Gold and silver sell off a little bit. Look over to Europe, look at Asia, right? You had flat in Europe for the most part, although the CAC has been picking it up, and Asia is trying to trade a little bit higher. The big thing that's happening out here, folks, is the reversal yesterday off the Fed, talking about maybe starting to unwind some of that $4 trillion balance sheet that they accumulated over the last decade. And that, that whole ideal of when you're going to unwind that has an impact on what the market does or doesn't do. And so if we look here at the charts, what you're going to notice is a lot of chop. And if you look at it straight neoclassical tonight, the read is an under over, less volume, right? This thing should try to push to the upside. The problem is that right now you're in chop zone, and that is that you're getting day up, days down, big wide price spread ranges, right? You have these big wide price spread ranges. You try to break it down. It's kind of a bear trap reversal. In other words, there's a lot of chop going on as this market tries to determine where it's going. And so these small time reads here, like this read tonight, which is an under over, I don't think you can put that much weight on them. The bigger reads is what you need to be looking at. We've talked about it before. It's the top of the swing point lows. Those are the bearish retest regenerate zones. There's one there. There's a second one here. You got to get over this area. They tried here, they failed. They tried again, they failed. Today they didn't quite get to it. And if you get over it, you've got the one up above it, which is the breakdown bars high. And that's where we almost got to on this failure yesterday. As far as the other markets, they look about the same. I don't think you're going to see much difference in them. If we go to the broad Nasdaq, the Nasdaq failed yesterday on slightly less volume to get over that swing point high and stay over it. So it's a test failure at the high. Today, it looks like you have an inside bar, 56.22. I actually undercut it by 4 cents. So here you got the same read that you have on the S&P, and that is that you're under back over a little bit less volume. The problem, as I say, is that these, that particular read in a chop situation, right, just doesn't mean that much. So don't put that much attention to it at this particular point in time. If you look at these markets long term, folks, and especially the Nasdaq, the NDX, they look good. They don't look bad at all, right? All you have is a consolidation going on for what looks to be about 7-8 weeks now. The problem with this is that you're going to get a break one side or the other. Either you're going to leg this thing higher or you're going to leg it lower. You're going to expand the range to the downside. And that's where the risk is, right? Is that it's going to do one or the other here at some point. And if we look at our MTTFs, it's probably going to do it fairly soon. Here's the NDX, and I'll show you what I mean by the MTTFs. Here's your bullish on the weekly. you're getting up into the nosebleed situation, right? The situation where you're probably going to get a break to the downside in order to set this straight. If you look at the Nasdaq, it's already broken once. It just got back, the NDX just got back over the swing point high, but you've got new lows now that are equidistant, right, in terms of where they line up. And so a break of these, right, would be a faster move to the downside most likely. If you measure out that point, 53.16, if you come over here and you look at these lows, 53.16, in other words, that's the range on the NDX. And so if you get that faster move on the downside, then that could get you a spell, shoot it down a few more points and, get a decent, another couple percent at least to the downside. Russell's been kind of the heavy dog, right? I mean, this thing just, every time it tries to lift, something happens to it. And you can see that when you look at the chart. It's pretty obvious, right? As you go up, right, you get these big spike bars to the downside, big spike bars to the upside. That's a hallmark of indecision when you see this kind of stuff. Leads to a big move down, big move up, big move down, big move up, now another big move down, today a spike up. Folks, this, if you just look at it and just forget everything else and just ask yourself the old adage of where are the highs, where are the lows, well, clearly the lows, at least, from this perspective, have been lower, and the highs have been lower as well. That's the old definition of trend. If you look at the neoclassical definition of trend, this thing's in a bearish trend. Until it can get over a swing point high, and right now the only one is up there is here, this one will print after a couple more bars. 1, 2, 3, 4, yeah, 2 more bars. And so you're going to have a couple swing point highs print at the top. There's going to be one here and another one there probably. And there's probably going to be a couple down here that print. Well, actually you have the one here that's already printed, and you have these over here. And so the real crux of the matter is that you've got a range down here that if it breaks is going to lead to a faster move, and you got a range up here if it breaks is going to lead to a faster move. And so this is your range. Typically when you see a wide price spread, heavy volume bar, which becomes an anchor bar, that's what this bar is, right? Once you see that, it usually contains price for some period of time. It just doesn't get overrun on the top side or the downside very easily. It tends to hold price. So as you see, we got down close. What do? We try to spike it back up. You got up close. What do? You try to spike it back down. That usually plays out for a decent period of time, and that's what's going on here. I don't see much anywhere else. You got the same sort of patterns in the sectors. If I look over at the currency markets, you've got the dollar that's strong, the euro's been weak, but the other thing that you see here that hasn't got a lot of attention yet, and which typically is not good for the markets, is the Japanese yen has had strength. This thing had got over swing point highs, and let's look at the yen together here. So this thing breaks over 2 swing point highs. You have one here, you have another one there. As it comes back, that's a bullish retest and regenerate. In other words, it's going to come into that, and if they can't break it down, it's going to try to regenerate to the top side. The fact that it came back after 6 bars, there's 1, 2, 3, 4, 5, 6 bars here. The fact that it came back after more than 6 bars says it will probably only get about a third of the way in. That's exactly what it did, right? And now it's trying to regenerate. If it can regenerate, it's going to break a swing point high and continue to the upside. And if you look at it on the weekly, you've already, on a weekly, let's draw this one out too, you've already got over this swing point low, and now you're trading into this one. And if it does what it should do, it's going to try to get deeper into this swing point low, which means it's going to attack this area here. That's going to put more pressure on equity markets worldwide. Typically, if the yen's going up, that's not a good thing because of the carry trade that's out there. Dollar on the flip side, as the euro weakens, the dollar strengthens. You had the big Fed bar here with some volume come in. You get over that, you're going to go attack this area up here, which is the breakdown bars high. And world markets, the only ones that look interesting there are the only one that really, well, there's two of them. Let's talk about the two that have interest right now. One is France. This is the CAC. CAC goes back up. If you're looking for ideal shorts, you get an extended move. This one's not that extended. It's a decent sized move up. Had some congestion here though, so it takes a little bit of the edge off. Same thing there. Angle of ascent, not bad, right? Pretty good angle of ascent. What is it doing? It's coming in to test. This pattern here is an over-under after a pretty good move. So you can get a reversal. They get to pull back off that bar, comes right back up. That's usually the best place to short, exactly where it is now. You don't have to risk much on it. I wonder if they're going to try to press this back down tomorrow. The other one that's interesting is the Shanghai market. Now, Shanghai has been powering up on volume as we come into this big meeting between the two leaders. Gets over this test into that high, test it with more volume. That's going to try to push higher tomorrow or overnight tonight. Swing point high up there's 33.01, got huge volume on it. As you come into it, you don't have the volume. Let's see what it does tomorrow. It looks to me like this is setting up for a test failure of that high. That's it for tonight. Tomorrow we're going to get employment numbers, and then we're going to get some sort of feedback on the political situation between China and the United States. I think those are your big movers. I wouldn't be surprised to see that latter political part come out kind of late in the day. If that's true, that's going to give money managers, institutions, and so forth a lot to chew on before the weekend. You could see some faster moves in today. Have yourself a great one. I'll see you next time. Good night.